Hi guys. Okay, so today we'll be talking about Mori. Why? Because I have quite a lot of people texting me asking about my thoughts on Mori. So I decided to do a very short one today on Mori lah. Okay, since generally this one I think naturally in today's market is quite eye catcher because the location is good, central ma. I mean quite central ma. And then it's freehold ma. And then it's selling below 2K PSL ma. Some of them 1,600, 1,700. So naturally it gets a lot of attention. But later we'll talk about the location. So this is Mori. Okay. As you can see, this is not a very big development, so we'll talk about it later. Some of the facilities, or rather most of the facilities that we have in this development already, you have this is definitely not a 50-meter pool. Not can't remember whether it's a 20 or 30-meter pool. And then you have this nice chillax area, which I think I really like. I really like this concept. Of course, how the end product is, we don't know lah. But I think this is something that I really like lah. Okay, I like this kind of chill places lah. Anyway, so before we continue, just a disclaimer: anything that I present here is just based on my own perception, my own perspective, and then what I research lah. Doesn't represent any other people's point of view. So anyway, let's begin. And for those of you wondering, this is Mori over here, and you can see there are a lot of other condos, apartments, a lot of residential areas. In fact, this is very happening for those of you who already realize already. This is along the Geylang Road, and this is Gulamat. Okay, over here, just below. And then the repetition of the place, I think I'll leave it to you guys. I think most of you who are looking at this video probably know already, so I'm not going to talk about it too much. Okay, and then we look at the 1 km radius. Today I realized there's too many to calculate. I cannot. I'll go crazy. So I'll just show you the supply in the area. How many competitors are there? Because why I didn't bother calculating? Because a lot of them are very, very, very similar products, very, very similar development. So there is no point counting because there is no competitive advantage I feel for Mori based on this. And then if I zoom in further, you can see all these are fellow competitors in the area within a 1 km radius. That means if somebody wants to buy Mori, wants to buy some place near Mori or rather in Mori, will they just look at Mori next time? Likely not, right? They will be looking at around the area. So these guys are all potential competitors. And then of course these are the bigger ones at Dakota. There is one coming up soon next year. Okay, so land size is 37,000 square feet, not exactly sufficient, I feel, from my own point of view, to be considered a big development. Of course, the good thing is that it's freehold, but unlike many of these other competitors over here, a lot of them are also freehold. Okay, this guy over here. And then I pulled out a few competitors around the region, around the area, and also some of the newest ones to compare. And also the number of units are about the same. The land size is also about the same, so that we try to keep the factors as close as possible. We look at the characteristics that are very similar, so we have a fair comparison. So we hope that it's more like an apple to apple kind of comparison. The only thing that I cannot control is their building and then sale date, which is the TOP date or these lah. I think the rest are pretty much quite similar. Location is quite similar, definitely walkable to each other. Land size is also about the same. Unit number is also about the same, 100, slightly over 100. So we look at how the other competitors perform over the years. You see, Resi 24 hasn't finished yet, hasn't finished building yet, but it has been generally relatively flat. Guillemard Streets has been on a downtrend ever since launch, and then same goes for number 1 suites. This one is a much more pronounced downfall. And then you also have Resi 26, which is over here also, and then you have over here Mori flying high. So does this graph actually look very optimistic? I really don't think so, considering they are this guy over here is only built in 2016. The other guy is built in 2017. Later we'll zoom in on these two, and then we'll see. Okay, so the green and the yellow are very far below where Mori is. Mori is above 1,008. In fact, it's averaging about 1,009. Okay, and then you look at the gap. The gap is almost this over from the Guillemot Suites is about, I think, 500 to 600 pieces. On the other hand, you have the gap of almost 900 PSF from number one Suites, which is a difference of maybe about 8 to 10 years, because considering Mori should be done in 2025, I think. So anyway, 2026 compared to this guy, 10 years apart, I don't think you need difference of almost one time difference lah, because all of them are freehold one. So I think this is actually not a very safe margin lah, in my opinion lah. And then the performance of these three guys hasn't been very optimistic. Okay, the Resi 24 we haven't really seen yet because it hasn't been out on the resale market. It should be done somewhere along this year, and then we'll see how it goes. And then we zoom in into one guy, which is number one Suites, only done in 2016, so not very long ago. In fact, only 6 years ago. These guys made money. So all these guys made money, but how many of them really made money? I think we have to see again. From my calculation, because you remember your costs, you have your buy stamp duty, you have your agent fee when you want to sell, you also have your maintenance fee all these years, and then you also have all the other expenses like generally, or especially your yeah, I think I talked about this one already, buy stamp duty. So all these are, and then including your interest when you lend the money from the bank, unless many of them are paying full cash, which I really don't think so. And then if you factor all in, right, I don't think they are making. I don't think all these courses are cheap. So I would say maybe on average maybe 30 to 50K will be the bare minimum to break even. So probably these guys kind of like starting to incur some form of loss. These guys are definitely lost. So you have one guy losing as much as $104,000 upfront without even accounting for the expenses. And then you have these guys making money, I feel, after all the expenses. How much do they actually make? I think I'll leave it to you to do your own calculations. But doesn't seem to be making quite a lot of money, considering they are making all these monies over a period of 5+ years. Okay, so these number one Suites, and have they been making money from rental? I would think so, probably. Of course, the absolute amount, is it high? I would say probably not, because there's still a lot of your causes involved. Remember your buy stamp duty, the agent fee to help you rent, also maintenance fee, interest, all these kind of. Later we'll talk about the calculations a little bit. So on average, I think 2003 now, because recently the rent has went up. Before last time they were renting about 1,700 plus, 1,800 plus, around there, I think. Okay. And then but on the other hand, how long will it take for them to actually recoup the amount of money if they lost? This guy definitely lost money over all these years, even if he has rented out all the way. And then we look at Guillemot Suites. We have these guys, probably I think the break-even point also around $50,000+. So maybe only 4 guys make money, the rest lost money. The maximum loss is $95,000. Okay, and this guy, considering this is a big unit, did he actually make money? I think I'll leave it to you to calculate. If you don't really know how to calculate, you can just drop me a text, but later I'll just show you an example. So what this means is that these numbers don't seem to be very optimistic for the investors. So unless you are really waiting for renter to slowly, your tenant to slowly start filling up all your loan by of course paying off your principal, which is going to be a very, very, very long drawn game. But so if your strategy is like that, then probably I wouldn't say maybe not a very efficient use of our money because there are people who have been riding on fast horse going up on capital gains, and also at the same time having very good rental use. Some of the new condos have been recently TOP. They are commanding easily more than 3% gross yield. We are not even talking about accurate form of calculations. Okay. And then we look at one more, which is not, I didn't really put in the chart because this one is a smaller unit, but this is the newest guy in the area, 2018 TOP. So I decided to compare. This is the newest guy in the vicinity. And then we look at this. None of them made any money. And then on the other hand, all of them lost money. maximum at $118,000. So imagine if you were one of these investors, how would you have felt? I mean, when you first when these people buy, I mean, they must be thinking what can go wrong, right? I mean, it's like, I mean, Geylang, yes, there's all the negative associations with it, but then after all, the location is good. Location is good, and it's freehold, and then it's cheap, and then low quantum, and then low PSF. I mean, what can go wrong, right? And then this is what is happening lah. Sometimes in some things when you buy cheap, it ends up as being cheap. I think we can relate to not just property. We can relate to quite a lot of things like even your ID, even your cars. Okay, so quite a lot of things lah. And does this apply to properties like this? Is there a reason why these properties are not able to go up? Okay, so these are rental yield. I think these investors, they can just yeah, like we can think about collecting rental, how much money are they making. So yes, these guys may not be making capital gain, but they may be making money from rental. So let's take a look at the calculations. On average, 1,550 PSF, because we take a look at this. So we take an average of 1,550 PSF, and then we take maybe 398 square feet. Okay, and then that gives us an entry price of this last time. And then assuming we get about 2,000 per month rental out of this, I think 2,000 is on the high side lah. So assuming we get 2,000 rental per month, and then we have that time we can borrow 80% loan to value ratio, and then we assume the interest rate is at 1.5, which I think last time was higher, was about I think almost 1+2. So that will give us a monthly installment of about 1,700. But out of this is the real cost, because this is pretty much savings if the property price remains the same, which unfortunately for Pavilion Square is not. So this is interest. And then this is sunken cost, because it goes to the bank, it's never ever coming back to you, even if you sell the house. And then you have maintenance fee, maybe 200 a month. You have property tax, maybe let's just say $100 a month. You income tax really depends on the tax bracket. So we assume it's $100 a month average. Then you have agent fee for renting out the place, which is roughly, let's say about 2 years, you get $2,000 to pay the agent. So this is your cost, the gross expenses, right? And then out of this 2,000 minus this, you have this amount of profit. So after, let's say 3 years, because it's TOP 2018 and then 2021, this year 2022 it just started, so we don't take this out, we take this 3 years. 3 years of renting out, that gives you a total of $35,000. Will this $85,000 be enough to cover all these guys over here, excluding your buyer's stamp duty, your agent fee, and then your maintenance fees, and all your other fees involved, especially also your legal fees? Okay, I think you think about it. Is it really that simple to be making an investment decision just because it's freehold, just because the location is so far good, near to near the food, near to city, near to all these, but that doesn't always mean that all these conventional wisdom are going to help you make money. Okay, and then now we look at on the other hand, if somebody, let's say during this whole period of time, decided to hop onto what I call a fast horse, decided to look on the bigger scale, and then look at the right developments to enter. Of course, the quantum is higher, not really compare, but if they manage to dig out some money to go invest somewhere else, will they have been able to maximize their profits? So this development is just haven't even finished yet, so definitely there's more to come. But so far there's only 3 guys who didn't make money. I think these are probably dropout units, and then 24 of them actually make money. So far haven't even built. There's already a guy making cashing out at $300,000+. And then will all these and the best part is this capital gain is not taxable, and this property hasn't even done yet, so there's no property tax. And then because it's progressive payment, that this guy is not even incurring that much loan interest in the first place. So which I think at the end of the day we have to decide which horse are we going to hopping on. Are we hopping on the capital gains fast horse, or are we hopping on the rental gains, which is more like slow horse, assuming there is no capital gain? Or are we going for something that is a mixture of in between? Okay, Anyway, just an example of for Mori's entry price is exactly not as low as all the other competitors we've seen already, because a lot of them are selling at 600 plus, 1,500 plus $1,000, but this is almost twice the quantum. Can the one bedroom fetch $4,000? I really don't think so. Maybe at that point of time, maybe the rental inflation has really went up a lot. Maybe there's a chance, but I really don't think it's going to go that high. So will the rental bill be as high? Because the PSF does really look quite high compared to your competitors' PSF. Okay, and these are the 3 bedrooms PSF. 2 bedrooms even are selling at already 1,800 PSF. So will that affect your rental yield? Okay, I think these are the factors we need to think about it. So like what I mentioned just now, is it do you want to just buy a freehold and then rent it out just because you know it feels safe, because you don't want to think too much, because you don't want to do your research, you don't want to go and consult the right advice, and then you end up with a property that yes, it's freehold, nobody's going to take it away from you, the government is not going to take the land away from you, but if the development is not going to be making is not going to be well maintained, is it going to be attractive to a future buyer, and hence will your gains be fast or slow? So will it be like the e-hall, or will it be like the fast source over here? Okay, will your investment, which one of your investment would you like to have? Is it going to be a fast gains? Is it going to be a slower one? I think at the end of the day, it really depends on your preference, how much research you do, how confident you are, and most importantly, are you willing to take the action? Because I'm recently seeing quite some people who are just sitting on the fence and waiting, because they can't seem to be making the right decision. They can't seem to be able to make up their minds. So yes, at the end of the day, we'll just see, because especially now that everyone knows that the dairy farm what came out break even is at about 1,007 plus PSF. And how will this affect the market from next year onwards? And in fact, we don't even need to wait for next year. This year's incoming OCR market is going to be selling at 2,000 plus PSF. And how will that affect the rest of the market? Okay, so all these things we have to take into account, and then will we be the ones paying the profits of others, or will we be the ones that is making the profit from others? I think we have to really think about it. So all in all, I think Mori is a place that if you want to play the slow game, yes, you can try. But of course, the capital side, I'm not even sure whether you will be having at least some form of wealth, your capital preservation, unless you're telling me you're going to be holding for at least 30 years, then you don't want to even think about it, you're just going to rent it out. Then just keep in mind of the potential maintenance causes when the property gets older, and also along the way how much rental troubles you may incur, because let's just face it, a lot of times no matter how we filter, most of the times when we are lucky, we get very good tenants. If we don't get good tenants, they create a lot of trouble for us. Given the amount of net yield that we are getting, is it worth all the trouble, or is it just worth putting the money in the CPF to get even 4% per annum interest, risk-free and trouble-free also? Which one is going to be a better option for you? So all this we have to keep into mind. And then I think this is what my thoughts on Mori is. So are there better deals in the market right now? I think definitely so, but we'll see. Okay, if you have any issues, you need to you have any queries or more on Mori or any other things on the market, then do feel free to drop me a text and I'll be happy to help. Okay, that'll be all we have for today. See you guys. Bye bye.